one of the areas for me that I think is very exciting in sort of places like North America is that we're starting to see capital chasing areas that haven't really been explored.
Hello and welcome to the Assay Live. I'm here to talk about exploration, filling the critical supply gaps in new energy metals. I have Matt Fernley, Head of Research at Westbeck Capital Management and Managing Director at Battery Materials Review. Matt, thanks for being with us here today.
Thanks for inviting me. Great to be here.
And so across the commodity spectrum, a lot of analysts have been predicting a very significant shortage in supply in the coming years, and investment in new exploration is definitely critical to fill a lot of these gaps. So to start off, where do you see the most critical supply gaps coming in this space?
Well, I mean, there's supply gaps, I think, across the whole space. But if you sort of pushed me to sort of order it in the sort of battery materials or the technology materials space, I mean, for me at the moment, anode materials. So not necessarily on the mining side, but on the midstream side in the graphite space, high purity manganese, lithium is definitely an area. And copper is also an area. Now, if you included an ESG component in that, nickel would shoot straight into the top three as well. And, you know, we have this really interesting juxtaposition in the nickel market at the moment, whereby a lot of contracts have been signed up with perhaps not particularly environmentally friendly production or development assets in Asia, in Indonesia, by Western world OEMs. And if you did include, for instance, an ESG component in that, then I think, you know, there aren't that many ESG friendly nickel projects coming in. And we do need to see more exploration in the nickel space as well.
I'm going to deviate a bit from my question set. Interesting you bring up kind of the OEMs getting into this space, and especially maybe not necessarily taking into account a lot of the ESG factors. How do they manage that, especially when it comes to the kind of the end of the line coming into the electric vehicles space? So how is that ESG versus energy transition kind of playing out?
I mean, it's a really interesting space. I mean, as both an investor and a commentator on the space, it's actually a very interesting question, because what we have expected to happen, particularly from the Western world OEMs, particularly from the European OEMs, hasn't actually come to pass. So we had expected certainly the European OEMs to have much more of a focus on ESG, pulling forward projects that were more ESG friendly. What we've actually had is effectively a fight for near-term material, to lock in near-term material, but no investment in medium and longer term material by funding sort of exploration development projects. Now, to some extent, we are starting to see that now in lithium. So we are starting to see the European OEMs starting to look at locking in longer term lithium, but at the moment it's still evaluation projects, development projects. We're not really seeing enough cash flow into the exploration side. And, you know, as I referred to earlier in nickel, there's some really world-class projects in Canada and Brazil, in parts of Africa, sulfide projects, which are much more environmentally friendly than the, you know, double pyramid laterite projects in Indonesia. But we're just not seeing OEMs sort of committing any sort of capital to that. And indeed, you know, there's some very interesting hydromet processes under development. We've just seen the first investment into a laterite hydromet project in Australia, actually, in QPM project in Australia. So, you know, we really haven't seen the OEMs working or acting in the way that we had expected, particularly from what they themselves said at the beginning of this cycle.
Interesting. So you started to get into, different types of commodities such as lithium and nickel in different jurisdictions. But maybe you can go a little bit deeper into what kinds of projects you see currently getting funding and where the funding gaps are
yeah, so I
emerging.
mean, I think the projects, so straight out, we are starting to see funding flowing into development scale projects, but still lacking a little bit of funding going into exploration projects. And, if we look across the sort of technology metals spectrum, certainly capital is quite shy of going into Latin America. Because of political issues as much as more than geological issues. And I think, what's happened in Chile, in Peru, has put a lot of capital off these areas. One of the areas for me that I think is very exciting in sort of places like North America is that we're starting to see capital chasing areas that haven't really been explored. So areas that haven't really been explored in 20 to 30 years with modern exploration techniques. There's some really exciting areas in Eastern Canada, in Ontario around the Sudbury Basin, nickel, copper exploration, in Quebec, lithium, graphite exploration. We're starting to see money go into those areas now. But there's a lot, in my view, there's probably a lot more to be discovered from a geological point of view. So, that's a really interesting area. It's most easy to attract exploration capital into traditional mining areas like Western Australia. We don't find too many of the Western Australian lithium projects struggling for cash. We don't find too many Western Australian nickel projects struggling for cash. It's really easy to get money going in there, but it's more of a struggle to get money going into areas that haven't really been funded that much over the last sort of 5 to 10 years. And, there's some really exciting exploration provinces opening up, for instance, in Brazil, where we've seen deregulation of the rules on lithium. There's some really interesting stuff going on in Brazil in lithium and in nickel, and actually in graphite as well. Eastern Canada, as I highlighted, there's a fair amount of exploration money going into Argentina in the salar, lower grade salar brines in lithium. And, that's an area of focus, obviously with its own risks, because that requires direct lithium extraction. But certainly that there has been a focus on that area. But I would like to see more money going into Brazil, where I think there's some really exciting projects, and also more money going into Canada, which I think has been underexplored over the last sort of 10, 15, 20 years or so.
Okay. Interesting. I mean, you spoke a little bit about the political unrest, specifically in South America, that's kind of keeping investors away. What other kind of interesting trends are you seeing possibly, on the investment front? So we talked a little bit about OEMs. How about kind of the government's role in pushing?
Yeah, I mean, I think that's a really interesting question. Certainly, up till now, governments haven't been overly helpful, apart from the Chinese government, in pushing or setting directions for their industries. We've obviously got the US government with the Inflation Reduction Act, which I'm not convinced will be successful in controlling inflation, but hopefully will catalyze investment in raw materials in US friendly regions. In Latin America as a whole, governments have sort of flip-flopped around a little bit in terms of encouraging the mining industry. Obviously, you've got political uncertainty in countries like Peru, which are key to development in the copper space. You've obviously had the Chilean government flip-flopping on its mining legislation. The Argentinian government is actually being encouraging to the mining industry at the moment, but obviously there are risks that that could change around. So, and then obviously Brazilian government is a little bit more sort of focused. So, and then in Europe, I'd have to say that the EU has been kind of a disaster area in terms of encouraging investment in raw materials in the EU, because it's just been too highly regulated and too much planning uncertainty for projects trying to get off the drawing board in the EU. So it's very, it's very difficult to draw generalizations. It's very regional, and it varies very much by material as well.
Okay. We've seen a lot of dialogue recently, and this also relates to the U.S. Inflation Reduction Act, about growing regional supply chains for these key metals in the energy transition. Do you see these regional supply chains emerging? Are they impacting the exploration and the funding space moving forward?
I mean, for me, this is going to be a core thematic going forward. I mean, if we genuinely want to develop successful electric vehicle industries, downstream industries that are not reliant on China, we're going to have to develop these regionalized supply chains. Now, Europe was the early mover on this, but they really haven't gone anywhere in the last 3 or 4 years. The US, with the new government, has come in, and it's actually, I actually really like the Inflation Reduction Act. I think it's actually a better act than the initially proposed act around about the turn of the year. And what I particularly like about the Inflation Reduction Act is it's not putting the onus on US raw material production. It's saying, look, we'll open out raw material development lines to the US, obviously, but also to Canada and to Australia and allied countries, which we believe should be in a position to supply our industry. And I think that's very clever of the US, because obviously it recognizes that there are planning issues in the US. It is difficult to get these raw material projects off the ground. Canada is sitting right to the north of the US. It has, 5 out of 6 critical raw materials needed for the battery industry. It has copper as well, potentially has other key raw materials. So, it makes sense to utilize those resources, and it presents lots of opportunities, for the Canadians. The Europeans now have to follow on from that, but because Europe is so fractured, it's very difficult for Europe Inc. to sort of compete. So I think, we are starting to see regionalized supply chains. I think the US is going to, or North America is going to take leadership of ex-China away from Europe. And then also we're starting to see focus now on Asia as well. So we've seen Indonesia looking to develop its own supply chain and bring some of the EV industry into Indonesia. We're seeing India now starting to get involved, starting to look in to building its own supply chains. And then obviously we see Australia trying to decide whether to go midstream and downstream itself. I think they've certainly taken the view that they're going to go midstream. The big question now is whether they go downstream and develop their own integrated industries. So, we are starting to see this happen. And of course, from an ESG point of view, it's also friendly if we develop, an upstream industry in North America with North American environmental, social, and governance legislation, using, Canadian hydroelectric power, which is obviously a lot cleaner than the Chinese power sources that are currently in use. So, there's a lot of reasons to tick that box of going into regionalized supply chains. But the problem is, we in the Western world have spent the last 30 years decentralizing our supply chains away from these areas, and it's going to take a long time to bring these supply chains back into the core regions.
Absolutely. And I think, I mean, my last question was kind of around the challenges of doing this. There's been a lot of notes about labor shortages for the industry and lack of machinery needed. How is this impacting the exploration industry? And I suppose what can be done moving forward?
Yeah, I mean, it's a core problem. I mean, I highlighted, I think, in the first issue of Battery Materials Review, whenever it was 4 or 5 years ago, this problem of a shortage of personnel in the mining industry. We really do have a big issue. It's not been helped by the pandemic, which obviously has impacted the ability of personnel to move, even state to state in countries, but certainly globally as well. And it's coming in really now at all levels of the mining industry. So it's not just in exploration, but certainly in exploration we do have a problem, with shortage of trained geologists, a shortage of trained drillers, and in the development space, a shortage of people who actually have experience of bringing in new lithium, nickel, graphite, you name it, projects anywhere in the world. It really is a big problem, and it's going to drive up costs. It's going to drive up exploration costs. It's going to drive up development and construction costs, because there will be a lot of pressure on the supply chain for the next probably 5-10 years or so, while we have this shortage of personnel in the system. So we don't just need to see capital coming in to the companies, we also need to see capital coming into educational institutions. We need to see a full push all the way through the supply chain if we're to establish these regional supply chains, and if we're in fact to establish enough supply, whether it be regionally or through China, to feed this sort of energy transition, because we are struggling to source capital in this space, and it's not helped by a lot of focus by ESG investors into putting off investment in upstream industries. And we do have this big risk at the moment that we're not going to be able to find enough material. That's going to cause prices to go up, and it's going to potentially very substantially destabilize the energy transition, because the cost of infrastructure, for instance, for offshore wind farms, or the cost of battery electric vehicle prices is going to make it uneconomic to own or build that infrastructure. So it's very much a situation whereby ESG investment has pushed investment away from primary extractive industries, and we really need to see that money coming back into primary extractive industries, because otherwise we're not going to have an energy transition.
Absolutely. I guess my last question really, is ESG focused investment the way forward? So are green investors, is this the missing link, and is there I suppose communication, or what's the best way to get this message across?
I think absolutely ESG is very, very important. I mean, it's important that we as an industry embrace environmentally, socially responsible investment. When I started in the industry in the 90s, ESG meant planting a few plants around the mining offices. So we have come a really long way during that time. But there's still a lot further to come. But I think it's very, very important for the industry that it communicates what it's doing on ESG. I think one of the areas where the mining industry is falling down is on its communication. It's a very interesting report I saw recently into reclamation of a mining project in the Nordic region, where he's actually made the land much more viable for living on, and from an environmental point of view than it was previously. Now that's a sort of home run that the mining industry really needs to communicate, because, you know, when we talk to investors who are coming from outside the industry, when we talk to people who are up in arms because there's going to be a mine in their home state, for instance, people always talk about acid mine waste, you know, having a huge hole in the ground, groundwater destruction, etc. So it's really important the mining industry takes these examples of where it has been able to you know, add value to a region, and talks about them. And the mining industry has to start communicating for itself, because there's a lot of people out there who are happy to diss the mining industry, but the mining industry has to start standing up for itself and saying, look, actually, you know, one, we need these critical materials, and two, by the way, you know, mining now is not like mining was 40 years ago. You know, we need a social license to operate in all the regions where we operate. You know, we need an environmental license to operate. We are changing the way that we work, and you know, we're a much more responsible industry than we were 30 or 40 years ago. But the mining industry has to communicate that, and that's where it's really falling down at the moment.
No, absolutely, and I think that's that seems to be the general message, is that the communication certainly needs to get better to make sure people understand the role of these metals.
Well, I mean, I think for me that's the core issue. I mean, I've said it before and I'll say it again. There will be no energy transition without investment in primary metal extraction. I mean, you know, there's a big white elephant around recycling. You know, at the moment we've got a lot of government funding going into recycling, but unless you actually produce primary metal, recycling is not going to count, because, for instance, particularly in the battery materials, we need to increase production by 5 or 6 times, and recycling is just peripheral to that. It's great that we recycle once we have a mature industry, but we need to get to the industry. We need to get the industry to a level where it can be mature, and that means that we have to invest in primary production. So, you know, there's a real issue here that we're not getting enough funding coming into primary extraction.
Absolutely. Well, hopefully messages such as this and our upcoming exploration edition of the assay are going to highlight a lot of these points. That ends all of my questions. So I want to thank you, Matt, for joining us today for the online Tech Metals event, as well as the Assay Live. Thank you.
My pleasure. Thanks for the invitation.